rising risk to the economy's outlook, especially from trade war between the U.S. and China. Some are citing that as one of the problems with slowing growth in the U.S. The slowing growth in the U.S. is probably more likely to do with global slowing growth, and that's probably got more to do with it than anything else. I think it's the global growth that is encouraging the Federal Reserve to cut interest rates. That is likely to happen this Wednesday, by the way, and that will be the first time in a decade, that we will have seen a rate cut. So we will see if that happens, although I think it's pretty much baked in at this point. Also, as we look forward, former Federal Reserve Chairman Janet Yellen was speaking at an Aspen Economic Strategy Group meeting on Sunday. And she said, quote, she supports a 25 basis points cut in the central bank's benchmark interest rate as the global economy weakens and inflation in the United States is lower. Former Federal Reserve Chair said that inflation in the U.S. also remains low, too low, according to Janet Yellen. Of course, it's always good to hear from a former Federal Reserve, if you're a federal chairman, agreeing with a move that you may be getting ready to make. She went on to say that the United States isn't an island. She said, we're a part of the global economy. What happens in the rest of the world, in Europe, in Asia, affects the United States. And it's also true that the United States monetary policy affects conditions all around the globe. And the global economy has weakened. Janet Yellen says, I think partly it's weakened because of conflicts over trade and uncertainty. I think the uncertainty is the key factor. Hey, I want to thank you for watching the clip. We sure do appreciate it. Would you go right now, click on that subscribe button if you haven't already? That helps us. We would appreciate it. Thanks again.